Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Let's start first and take a look at what happened on the markets this week.
Well, I think we can talk about another good week for hogs and another bad week for cattle, just like last week. If we start in the hog markets, we were up about $5 on cash hogs for the week. We can also talk about a pork cutout value that gained almost $4 for the week this week, driven again by, in large part, what has been very strong pork belly prices. If you look at that pork cutout value, we got above $100 on Wednesday of this week. That's the first time we've done that since October of 2014. So quite a turnaround in terms of where pork cutout has gone as we've gone through 2017. On the cattle side, again, not so much positive. I would call fed cattle down a little plus of $10 for the week this week. When you look at feeder cattle, they were steady to 6 lower, and feeder calves were 3 to 10 lower. So down across the board in terms of cattle prices. The choice beef cutout value was also down for the week, nearly $4.75. And really had weakness across the board when you look at all of the components that make up that choice beef cutout.
When we look at another week like this on the beef side specifically, are there things that producers need to be doing to protect themselves, as we've seen a significant drop in prices recently?
Yeah, so I think much of what we would have talked about a few weeks ago, where we were coming through holiday strong demand for beef markets, have in fact now moved in the other direction. I remind us this won't be the last time this happens. So if you think about where we're at in terms of cash cattle prices today, we're really back to where we were mid-February. And I know folks weren't very excited about where cattle prices were in mid-February. It took a long time to get us to where we were nearing that $1.45, yet now we've recovered or fallen very quickly, I should say, back to $1.21 in terms of fed cattle. So understanding that downside risk, I think, still sits there in cattle markets. Maybe not as much as there was a few weeks ago, and we were sitting at $1.45, but we are having a lot of supplies of beef on the market, and that's certainly something that producers should think about in terms of holding on to cattle for a longer period of time. What kind of risk management do you need to make certain that you remain in business longer term?
Scott, we talked last week that it was it's going to be a pretty busy last couple of weeks of June as we get into reports. Let's start first. Cattle on feed came out today. Any big surprises, or was it kind of as expected?
Yeah, so I think when you look at that report, it pretty much was as expected. And that doesn't mean flat, by the way. So when you look at the numbers we got out, placed on feed in May was up 12.2%. Pre-report would have said we would have been just a little plus of 10%. So in terms of what we got from the report, the pre-report and actual came fairly close. When you look at cattle on feed as of June 1st, up 2.7% out of the report today. Pre-report would have said we had been up 2.2. So again, fairly close. And marketed in May, both pre-report average and the actual up 8.8%. So we do see more cattle basically out of the report, and everybody pre-report knew that would likely be the case. I think placed on feed, we've seen some increase there. Mexico may be playing a role there with some stronger Mexican calf imports into the U.S. Going into U.S. feed yards with what was some very good possibilities to secure some black ink, probably driving feed yards to look for calves everywhere.
As we take a look at the placements specifically, obviously that lends to the fact that we're going to have more cattle to slaughter later in the year. What does that potentially mean as we look at pressure in that whole price, demand, supply conversation that we have so much?
Yeah, so I just remind us that I think when we get late in the year that, beef supplies are not going to run less, they're going to run more. And where that sits relative to demand, that balancing act is very, very fine at this point in time. And I do worry about some of that downside risk that's there now. To paint a little bit of a bearish picture for a minute, when you think about the fact that we're still down in terms of slaughter weights, in terms of where we're at in cattle today. If that were to turn around between now and the end of the year, and we actually talked about weights back to where we were a year ago levels, that adds even more beef to the market and could be problematic for us as we get late in the year. So I just want to remind us that, you know, the $1.45 fed cattle that we saw a few weeks ago, we probably all thought those were a little too high longer term. Maybe where we're at today, and this report suggests cattle prices we'll spend more time in this area.
Also out this week, Scott, cold storage and slaughter numbers. Let's talk a little bit about what we saw there and what that means for producers.
Yeah, so we look at the production side for a minute and livestock slaughter. So we did get records in May for total red meat and pork production. We produced about 2.1 billion pounds of pork in May of this year. That's 8% above a year ago. So many of the things we talked about earlier in terms of more sows, more productivity, and also more pork processing, I believe is beginning to show in terms of the expansion in terms of pork production. Beef comes in at about 2.2 billion pounds. That's 6% above a year ago level. So on both sides, we're growing, and again, a record in terms of total red meat production. Maybe the plus side of that is we did get 22 slaughter days in May of this year compared to 21 a year ago. So one more day of slaughter also probably boosted pork production a little higher.
Let's talk a little bit as we take a look at reports we got early on Friday. As we take a look at consumer sentiment and what that means for producers. But let's talk a little bit about what happened from May to June.
Yeah, if you look at the May 2017 Consumer Sentiment Index, it was sitting there at 97.1. By the time we rolled to June of 2017, we got that reported last Friday at 94.5. So a decline relative to where we were in May. It tells me that consumers are getting a little more skittish about where the overall economy is headed. Maybe a lot of that's related just to a lot of the discussion that you see in Washington, D.C. related to things like healthcare, budget, et cetera, and where that goes. I do remind us when you look at that June number, although down relative to the previous month, that's still 1.1% higher. And I think if we tie that back, you know, we got cold storage yesterday as well, and the fact that pork stocks at the end of May were down 4% on the year, beef stocks were down 10% on the year. Just reminds me that although we're seeing some of these signs on the consumer side that maybe things are slowing, demand's been really good, and also demand internationally has been very good. So although I worry about where that consumer side goes, I think what's been an otherwise strong economy has helped push a lot of beef and pork on markets.
Scott, as we take a look at that figure, is that something that we really kind of need to watch for the next couple of months to see if maybe that's a trend that we're seeing?
Yeah, I think so, Megan. When you look at where May was, again, we had a lot of strength going on in terms of that consumer sentiment index through May. And so, yes, we're down in June. I again like to remind folks that the general economy has been growing relatively strong as we have gone through 2017. You can look at the unemployment rates, and some will argue that unemployment rate isn't that great a measure. But I just remind us we have more folks working in the economy today, and all those folks potentially are going to buy up in terms of those meat purchases. So I don't want to suggest we have big problems coming on that domestic demand side, but we certainly want to continue to pay attention to where it goes when you have the kinds of growth in meat production that we're going to continue to see for the remainder of this year.
Okay, that's the report information for the week. Now we get into some of the interesting and rather different things that have happened this week. A lot of news that involves Brazil. Let's start first. JBS, in order to create some more cash liquidity following their corruption settlement last month, they put their largest U.S. cattle feedlot on the market to sell with hopes of, I think it's like $1.8 billion for it to take a big chunk of that or to help create that much liquid cash. What does that mean, first of all, for cattle producers? And how is there an interest in somebody that can make that purchase?
Yeah, so that's going to be a pretty hefty lift for somebody to buy all of Five Rivers, given it's one of the largest set of feed yards that we have here in the United States. Now, I will remind us, so we need Five Rivers to remain in operation, given that we're going to be growing cattle supplies as we move ahead. We'll have to wait and see what kind of cash that Five Rivers can accumulate for JBS. But I think in the short run, it probably doesn't make a whole lot of difference to where we're set in terms of producers today. It's really who owns that next, and their appetite for feeding cattle that we're going to have to pay attention to. But again, when we think about the fact we're growing cow numbers, we're growing cattle numbers, we need more infrastructure the rest of the way out, and making sure those feed yards remain in business are going to be very, very important. I don't see any big changes in terms of that. It will be just finding someone interested in taking on the risk of feeding cattle.
Also on the Brazil side of things, the USDA announced yesterday it's blocking all imports of fresh beef from the country amid continued food safety concerns. There's been a lot. If you look into those numbers, FSIS has rejected 11%. That's significantly larger than any other country or the global average. What does that mean on the trade side for the U.S. and even on the supply side of things?
Yeah, so a couple of things I'd say, so number one, Brazilian imports of beef into the U.S. still remain very, very small. So in terms of the actual market impacts of that, I don't expect a lot. Now, you can have some discussion about what's this mean in terms of how does Brazil treat us in terms of the United States. And so is the elimination of trade here to the U.S. science-based or not? I have a hunch that we'll here in the United States say absolutely it is, given some of the issues that we've seen. And when in fact you see Brazil itself that had 5 plants that no longer were eligible to ship to the U.S. In terms of their own self restrictions, it tells you they know there are some problems there. Yet do they turn around and say we're also going to restrict trade from the U.S.? This idea of what's science-based and how do you make sure that you have fair trade in terms of these types of issues may become front and center. However, when you realize again that we did have such large rejections already going on, that it does suggest there's some issues that Brazil needed to work on, and we'll have to wait and see whether we get that turns around anytime soon. And I think we're going to be slow in this country to make sure that some of the issues we were seeing that caused rejections in the past are fixed before we really talk about Brazilian imports into the United States again.
And two-way trade just resumed after a 13-year hiatus at least on the U.S. side, heading out into Brazil from the BSE scare in 2003.
That's right. So these kind of trade issues can certainly result in long-term negotiations to try to get markets open again. And again, as much as we'd like to say, well, it just needs to be based on sound science, and that would seem very straightforward, I've found that sound science sometimes is defined very differently depending on which country you set in.
To wrap things up this week, Scott, and to round out the month of June, I can't believe we're already halfway through the year already. Next week, Hogs and Pigs report comes out. What are some things we're looking for next week?
Yeah, so again, we just had pretty strong runs in terms of hogs. It'll be a good chance to see what we've been doing in terms of that sow herd and how much building has been going on in terms of sow numbers. And it really sets the stage for what do those runs look like of hogs when we get into the late part of 2017. This week I think we heard a little bit of news. We're going to push one of those plants coming online at least a month or so. I don't think that's a big deal, but we can start to balance capacity and those hog numbers once we can get a little bit more information out of hogs and pigs next week. And again, we get acreage as well next week. After a little cheaper corn price this week, it'll be interesting to see also corn and soybean acres next week as well.
And prevented plant also comes out, correct?
That is correct. It
will definitely be interesting to see how that looks. And I was going to ask you about the pork plant, but you took the question right out of my mouth.
Very good.
Anything else this week, Scott?
I think we've covered a majority of it.
All right. Thank you. Good to see you. And we'll have plenty to talk about again next Friday.
Absolutely. Have a good week.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, check out John Perkins' Market Minute on Brownfield. Have a great weekend. I'm Megan Grebner on Brownfield.